Good afternoon, one and all present here. So, I remember when I was doing my articleship, that when there used to be a case for solving the trial balance and preparing the P&L and balance sheet, when I used the calculator, my auditor used to say me that you're using calculator for such a small number. Shame on you, because he was 1950 chartered accountant, all India rank holder. So he was like very amused when I used calculator for calculations. But in today's world, even calculator is not enough. That's the kind of volumes of data and transactions we come across. In this context, I welcome you one and all with our two great speakers to speak on this topic. Mr. Ashish, he has got a wide experience from the service industry and healthcare in particular. Mr. Ganesh, a well-known person, has got a massive experience in the manufacturing industry and currently part of CFI Technologies. So, I would like to place my first question to you, Mr. Ashish, that today there is a plethora of options available when it comes to a data planning tool or a forecasting tool or predictive tools. And some of us get a chance to know about it, many of us not even aware of that. How, as CFOs or finance professionals, we should keep ourselves updated on this? Is there any structured way or there is no structured way?
Hello. I think the first part is to understand your business goals, because there is a lot of buzz and there is a lot of thing to do to predictive analytics and data driven, but I think it should be very clear what your business goals are. And then I think one should try to focus on the right set of data. What is the right set of data we need to help in decision making? I think these are the two kind of pillars to start with. One should not get just flown with the predictive analytics, the AI ML. We should clearly understand what we want to achieve. It could be a customer behavior analysis. It could be a price. It could be something on FX. What exactly is the business goal should be very clear. And then the kind of data you want to analyze should be thought about. And I would say validate the data, what you want to use, with historical. I mean, try to play with that data with how, in history, go back, and if you were to do that, use data for any decision making, does it make sense? And then take the next steps would be my advice, and then look for what tools kind of fit into that, rather than going the other way, getting caught up into the lot of, the latest technologies which are there.
Okay. Yeah, well said. So when you talk about history, maybe I would like to do the follow-on question upon the history. Like when we started, it was Tally and SAP and all those stuff. And the advancement in these kind of analytical tools and other stuff was an incremental growth. But in today's world, it's no more incremental, it's disruptive every day. So again, I'm placing the similar question with these kind of disruptions. Can you please explain from your manufacturing background how one can keep themselves abreast of this disruptive technologies and how to filter those things for the relevant one for us?
Good afternoon to all. And I had about 22 years of experience in manufacturing sector, where we have multiple products from the same company, and there are multiple customers for the same product itself. So first and foremost thing, as the product should be in a position to, that is, software should be in a position to meet the requirement of the organization's growth and the vision. I can give one example is that we had one sugar company, sugar manufacturing division. Other one is biopesticides. Third one was nutraceutical. All the three business segments are entirely different from each other. And the level of output relating to taking decisions are entirely different. One, purchase based, second one, sales based. So as we have been starting from Tally and ERP, we have moved to the extent of daily online information. The information should be made available at any point in time for marketing department to take a decisions or purchase department to take a decisions. ERP is just a tool where we can get whatever we want. So unless you know what is required out of this, the ERP will not provide necessary output. So you have to be clear about what your output has to be and how the output has to be made available for the people on an online basis at any point in time. In the case of sugar, where the sales department will know that how much of finished goods is available. They need not ask anyone to check how much of sugar available for me to sell. It should be made available online. So ERP and output of ERP are very important to play a role. Even for production department, they know that how much of sugar is on the pipeline to come and when it is going to come. So on that basis, even the production can be made, can be planned correctly. So it is not the software, it is the output of the software, how we are using the software are very important for getting or leveraging the software. That is very important.
Okay, so it's more about the usage than about the implementation is what I hear from you. Sorry, yeah. So now, as a follow-on question, will you be able to share some success stories in your organization where you have used the recent technologies and then try to do a good data structure or a successful planning?
Sure. I think by and large, if you look at finance people, and I'm sure Ganesh will agree, they'd like to take data-driven decisions. So I think if you go with data to anybody, that's the best way to kind of, get over a particular assumption which the other person is carrying. So my philosophy always has been that anybody approaches me and says that he needs this investment or he needs this money, without data, my answer will always be maybe, because so we have been pretty successful from an internal customer's perspective first in terms of our success stories. I think the single source of truth for our people in delivery, in sales, to look at the same data and try to look at where the company is headed has been very advantageous. We have used data in my previous life from a revenue leakage perspective immensely, where revenue is leaking or what is the customer behavior. That's been an interesting thing. And I'll give not from my experience perspective, but from maybe which all of people here would probably relate to. Is if you look at the stock markets today, there's an interesting analysis on data and analysis. The belief is actually that the winners in the stock market remain the same. It is the losers who keep changing. And what's the story there? Why does the winners keep winning, keep making money? Is because they are using predictive analytics. They are looking at a stock at the right time to buy, the draw, etc. So it is all analytics which is driving all that. So I just wanted to give you that example. How strong is data-driven analytics today in our world, in the financial markets today? So we've had immense success both with our internal customers, because my focus internally was to help with the data with our internal customers, the people in the delivery, productions or sales, where you're looking at, say, an SFDC to tell them that, this is how the revenue forecast will look like, or to go to the delivery folks to help, this is how it's looking like. So, those are some of the things which have been very helpful in helping people understand.
Okay, thank you. So, Mr. Ganesh, is there any real life example where you can give about where your kind of data techniques, what you have used, have resulted in any cost savings or revenue growth or a profit growth?
The same example where the sugar being bought through commodity exchanges. So raw sugar is being handled by the exchange at New York and white sugar at the exchange at London. So the price of raw sugar and white sugar is the spread available for us to take a decision on this. And the gap between these two normally would be $100 to $120. In some cases where we can get even $140. $140 actually adding profit by $20 per ton. So how to measure that whether it is going to be 140 or 120 at what point in time? The predictive analysis says that if you draw the line of last 10 years of when it is going up, you know that whenever there is an announcement about the sugar market entirely in the world, then based on the information that the sugar market can go up or come down, the price of sugar would come down or go up. On that basis, if you are taking a call for the entire year, you can even save by adding revenue by $20, or we can even save the cost of buying the raw sugar at a lower cost of purchase. Second thing is that we need to have the analysis of what are all the expenses we are incurring and where we can make money out of this. At the factory, normally used to have in the sugar process, we'll be having substandard sugar, would be about 20 to 25,000 tons per month. And they'll be recording 25,000 tons per month, and they'll give the information to the finance department. They will multiply with the quality of sugar and with the value, and they'll say that this is a loss per month. Instead, we have asked them to, we have informed the value of the sugar per se. They have started showing that this is a price, this is a loss I am making. The loss is about 7 crores, 8 crores and all. So over a period of time, they feel that, okay, why I have to incur 7 crores? Why can't I reduce 7 crores to 6 crores? Instead of teaching them, okay, it's only 20,000 tons to 25,000 tons, they feel that they can reduce, they can contribute. So once they are reduced to 7,000, 5,000 tons of, from 25,000 tons to 5,000, we have celebrated with them. That is, they are proud to say that I have contributed to the company by reducing the cost. So one, we need to have capture the data, and second, make the data available for all the department of the organization. It need not be only at the top. The decision making can be done at the lower level of people as well. See, one of the cases where we used to have a tarpaulin wherein the sugar would be stored. After 6 months, the tarpaulin has to be removed. By having 6 months of weightage, actually the tarpaulin will get embedded in the land, in the floor itself. It takes another 10 man days to clean up everything, to take everything. While I was visiting there, I asked them to put the tarpaulin on top of it, so that they can remove the second one easily. So each tarpaulin is about 40 lakh of money. By using the tarpaulin once again, and that is about what, 1.5 crores of money got saved because of this. So we need not restrict only to the extent of financial data and other things. We have to go into the details about where the cost saving can be implemented or derived. For each and every issues we are having, we'll be finding an opportunity. One other example I can give is that we used to sell molasses. Molasses is a byproduct of sugar to our own sister company. So at a price which has been fixed. So we were selling at 5,200 rupees per ton. It's fine. One point in time they said, I did not want from you because they are not getting the benefit of sales tax. So they said it is not possible for us to buy from you. So we were at Kakinada, which is seashore company place, where we have to necessarily sell it to other sugar factories, which is about 150 kilometers away. Having known that we don't have any other opportunity, any other option for us to sell, the purchaser started reducing the price from 5,200 to 4,800, 4,500, 4,000, then 3,500 also. Then we found that is there any other way to sell the molasses instead of selling at cheap price? Then there's an opportunity for us to sell outside India also. There is a market for molasses outside India. But what happens that they want 10,000 tons as a container. So we had 50 tons per day. The production capacity is 50 tons per day. So we need to wait for 200 days to collect 10,000 tons to sell outside. Once we taken decision, okay, let us go ahead with that. Instead of 5,200, it was actually at 10,000 rupees in the international market. leaving all this cost and storage, it was about 8,000 rupees. So fine, we can go ahead with it. After that, we have started diverting the molasses. Instead of selling to them, we have started storing in our own storage place. One at our company, other at the port. The person who is, he is buying at 3,500, he is requoting the price at 4,500. We said no. 5,000, we said no. 5,500, we said no. 6,000, no. 7,000 rupees was the amount which has been agreed upon. So price discovery can be seen only by identifying the issues. So after that, we have started selling 50% to the other company and balance 50% to export. So each issue you can find, and there is an opportunity available. But normally we used to think on a linear side. Maybe we can think differently. We can get saving. This is a permanent, sustainable saving for the organization itself.
So, Mr. Ganesh, what I could understand from your real life experience is that it's not about the data alone where we are looking at. It's about that how you add the qualitative parts to it, that is our brain. And maybe it was as simple as that is to 5-10 years back, rather it was not simple, at least it was manageable what I could see. But in today's world, with the kind of volumes what we are dealing, while there are tools for data which throws us, but still they are not tools which will give a human brain replacement on these reading these data. For example, AI or ChatGPT also today can read your text and give you some meaningful conversation or information. But if you paste the same table in the ChatGPT today, it is still not that sophisticated. So what do you feel, Mr. Ashish, that how can as CFOs or finance professionals, we can bring that balance between data and the qualitative inputs in a large volume context?
See, I think human judgment along with data analysis is the way forward. The judgment is required to interpret the data. It is, without human judgment, it is very difficult. The other thing where I would still say, in spite of the era we live out, AI, ML, ChatGPT, where there is a lot of uncertainty in the world today with respect to global interest rates, inflation. So you cannot just rely on data analytics. You have to have human judgment to interpret it. I'll give you a very an example which I just encountered about yesterday. I mean, some of you probably know the rupee broke about 83 levels yesterday, and there was talk that it will probably cross 83.2 or whatever. And suddenly today a report comes out that from Qatar there is a big investment in Alliance, and the rupee, I think in the morning I talked to my team, was trading as 83.5 and 83.6. Now, yesterday I was trying to, do some forward hedging and all that. Now imagine if I take a decision based on curves which bankers give without a human judgment, I would have erred. So I don't think human judgment can ever be taken away from data analysis. Okay. As you mentioned, I come from healthcare, and there was a $5 billion investment by IBM. Some of you may know that story. It's a very great case law that IBM invested in Watson. It was a tool where would help the doctors make better diagnosis, make better quality of healthcare. It was all supposed to be done based on predictive analysis, data-driven, everybody's health record, what's the best case, but apparently it did not work because the human element in judgment I still see is very, very important. The example which I gave you just yesterday is so critical in that.
So lively example, and there's no magic, and human judgment can never be replaced. In fact, I remember a short joke on this. Once there was a bull and a turtle which was talking with each other, and the turtle was seeing a big banyan tree. It was wondering and saying to the bull, "I wish I go to the top of the tree, but I have no energy." Then the bull said, "Why can't you taste some nibbles of my dung? It has a lot of nutritious value." So the tortoise tasted some, and it found that it really got some good energy, and then climbed a bit. Then from next day onwards, daily it started eating the dung. And then one fine day, it reached the top of the tree. Then as it reached the top of the tree, there came a forest officer, shoot the tortoise, and it fell dead. So the moral of the story is, bullshit alone can't take us to the top. You should also use human judgment in terms of data analytics and predictives in spite of the tools is available. So as a closing remarks, I just wanted to ask Mr. Ganesh that is there any, again, you're giving more of practical examples, so I would like to touch upon practical examples again. For example, when I talk about auto sector, there's large data available in different departments. Sometimes it comes bombarding to me. There are actually data silos that exist in organizations. How do we anchor the role of breaking these data silos and creating an effective data structure which flows seamlessly?
Yeah, even taking the same situation and the same product, there are some operations related output is not linked with the SAP. So it's like production and the process loss and the number of units of the chemicals getting added to the production are not covered in SAP because it is outside the SAP for quite some time. So we should not have something outside the SAP and waiting for the information to be put into SAP to get the information. By the time you'll be losing 5-6 days of time. So what is required is that how much of information, how much of data is getting generated out of the main ERP system, where how much can be included in the ERP system so that we need not wait for to get the accurate information to take a decision on time. Production, marketing, sales visibility, something like we'll be getting in the order is not getting recorded somewhere because it is relating to exchange transactions. Exchange transactions coming in a different tool itself. So we find it difficult to have one software or one method to get all the information in one dashboard. Some of are Excel based, some of them are ERP based, some of them are actually on a different software itself. So over a period of time, we have linked and we have made one software which is actually talking to each of these softwares so that we can have one output which is reliable, which is data driven, which is updated on a real-time basis. Second, based on the information, the decision also can be taken quickly. We need to know what information we require so that on that basis you can modify the output. In my previous organization where we used to have P&L on a daily basis. P&L on a daily basis in the sense some of the expenditure can be divided into 365 like insurance and other things. And some of the expenditure are driven by the marketing, are driven by the quantity of being sold. And some of things can be directly connected with the quantity of purchase and quantity of sales. So by having this, we know that what is that we are going to achieve by end of this month. Every day we know that what is the accumulated P&L, what is the P&L we are going to get it. So once the actual transaction getting completed, so we have to just compare with what is actually the financial statement says and what has been estimated for on a daily basis kind of thing. By this, our assessment of, there is no surprises at all. The surprises will be known on day one itself. Suppose there is a issue with respect to production. Production stops. There is no other production can be done for 10 days. I know that what all the direct cost is going to be incurred, indirect cost going to be incurred, so that I know that what is my month-end profitability on that day itself. So it is very important to know that what information in what form we require and whether the ERP can provide, not only ERP, any other software that can provide the information for us so that we can take decisions properly. So we used to have a treasury dashboard on a daily basis. We used to have profitability and a statement on a daily basis. That too, the daily profitability statement is being prepared by somebody like customer manager level because he will not have any emotional connect with that. Suppose the production did not happen, If I'm asking the head of the production to send the report on a daily basis, he will think that, okay, let me do on a higher production next day and then send the report by meeting the losses that has been done in the current day. So the person who has to send the information should not have any emotional connect. If there is a loss, there is a loss. If there is a gain, there is a gain. So information flow has to be made on a timely basis so that the decision also can be taken correctly.
So yeah, what the take from your point is what is that maximize usage of one software to actually breach this data silos is what I understand from you. In fact, it is a very good tip for me is what I will take it back to my own organization that because we parallel a lot of tools and sometimes we lose sight of the integration. So yeah, thank you so much, Mr. Ganesh, for sharing your insights. And thank you. Have a wonderful afternoon.